All right, so let's do a quick trade day recap. Tuesday, September 30th on the NASDAQ. So where to start? I guess with bias, since that's up on the screen. Just kind of came in today. Well, a couple things. It's NFP week, it's NFP Tuesday. So today is a higher probability day for NFP week. Not higher than normal probability, but if there's any days to trade, it's going to be on Monday and Tuesday of a non-banking holiday for NFP week. So kind of went into the market with that in mind. Also, the last couple weeks have been very difficult for my model. It's just not been performing. So came into the day feeling with a conservative approach. But nonetheless, noticing that, on the daily chart here, we came into an internal range of liquidity, had a sharp rejection, and then here we have Friday failed to close down below the range, signaling a potential reversal. Monday closed above this swing high right there, signaling likelihood for bullish continuation. And so I marked out this as my target for the end of the day, marking out the rejection block here on the daily. And then what we see kind of at the 2 a.m. candle, which is right here, right there. Coming into the trading day, I saw the 2 a.m. candle had swept this liquidity pool down in here. It tapped into this in fair value gap, had created SMT down in here. Now, this candle closed below this candle and this candle, creating an order block, but it failed to close below the tail of this candle. So I assumed potential for more bullish response. And then we go down to the 1 hour. It'd be easier if I probably had these right where it was when I took the trade. So 9 a.m. was looking pretty good to me. 9 a.m. had swept some sell side liquidity into the previous day low, had tapped into this fair value gap. We saw a nice response. We had some beautiful equal highs right above. This to me looked like a quintessential New York low of the day setup. And then on the 15-minute, ahead of that, I was seeing, well, I'm not going to get into that because that's irrelevant. That didn't even happen, so why waste the time talking about it? And here on the 15-minute, what we did see is, I'm going to retrace it back to that same 9:30. So here's the 15-minute close at 9:30. So swept this liquidity down in here, tapped into the 138 ER, and was looking pretty nice. So then, going here onto the 1-minute chart, we had swept these equal lows locally on the 1 minute, and then we tapped into some session liquidity. We created SMT down in here, and I went for a long. The only thing that wasn't quite aligning with this long setup here today is it was outside of my macro time window. This candle was 9:44. And so my rule being I don't trade more than 2 minutes outside of the macro, which would have been 42 after. So I decided to go in. I feel like I'm getting a little eager to trade with how little I've traded the last few weeks, in addition to the way that price action has been, not offering very many setups. But anyway, said I listened to my rule. I wouldn't have got into that trade. I probably would have waited for, I could have gone for a confirmation to close above this inversion, but all of it was looking super nice. So I went ahead and went for it. Super low risk, one mic for a variety of different reasons, and lost the trade. But I think the one thing that I am doing really well, and for any newer traders out there, is like there's periods that are going to be like this, where if you looked at my, well, I got it up over here. I guess I can probably share it. Let me switch over to it. So here's my TradeZella for this funded account. And looking back in September, I was pretty much gone these 2 weeks, so they don't really count a ton. But these were the 2 weeks I was green in backtesting. And then rolling into this third week here, I took only one trade. Wasn't really feeling PA. Wasn't able to get into the groove of things. And then on the 4th week of September, similar kind of thing. Wasn't able to get into the groove, 2 losses. And then here in this week, Monday was a win on demo, and then today was a loss. So this is a weird looking P&L calendar from the lack of trades to all the red trades. Obviously 4 red trades, 1 green trade, a negative P&L overall for the month of September. Though this month doesn't contain too many trades, so it's kind of like hard to judge. Because when we're dealing with, probabilities, 5 trades and a break even is not a lot of data. So what I've done really well here is, even though I'm struggling to get in the groove and struggling with price action at the moment, I'm doing really well at preserving the account. It still has a positive P&L. We can see the P&L curve here on the account. Obviously, it peaked up here, and I'm bringing it back down. But with my risk management system in place, what I am not doing, and what I've done in the past, is just pushed it all the way back down to break even and then down into drawdown. So I'm really proud of that fact. And I think for anybody who's, going through something similar, a newer trader, and this is their first, go through a rougher period like September has been for most ICT and reversal traders, is risk management, preserving your capital is paramount. Otherwise, I'd be probably pretty cranky, and I would be doing taking a lot more risky setups, maybe doing some things that might cause some tilt. And instead, with a solid risk management system in place, I don't have any worries. My account's still in the green. I'm still happy, and I'm just taking it light and easy. And so, what does that look like? Well, for one, with this kind of performance, I scaled back my risk significantly. I was up to, in August, $200 risk per trade, somewhere in there. I took the 4th week of August off too. And so I had been up to about $200 risk per trade, and now I'm down to about $50 risk per trade. And I think if I take any more losses on my funded account, I'm probably going to switch to a different account, just let it sit for a while, and or go to a demo account, because it's just not worth it. Like this price action, I can't navigate it that well. My model has not been working lately. Like today, we had a seek and destroy day. Look at this. I can't do anything about that other than maybe not trade it, but to me, it seemed like I was worth taking a stab at today. So what we had here today is, I'm going to go to the 5-minute chart, and right after I got into my trade, that's when the barcode started to happen. Let me clean this up here just a little bit. So barcode pattern, seek and destroy. And basically, it started forming just as I got into my trade, which can happen. But I'm proud of myself for staying out, for not trying any more attempts, and proud that I've got risk management dialed in. Now the next thing, I just need to get back into the groove. I also might want to add another model into my setup, because I need something to fall back on when the reversals just aren't happening, or they're not happening very cleanly. So yeah, I'm taking a lot of time to study this week, tons of back testing, reviewing all of my losses, and not freaking out. That's one of the things I think I'm really good at, not getting frustrated. I see other traders getting pretty upset at price action when it's like what we should expect, basically, on throughout the course of a year. There's going to be a poor month. There's going to be periods of 2 to 3 weeks where our model isn't hitting or we're off, and that's just part of it. So it will pass. And I just keep telling myself that. I'm like, I got my risk management in place. I'm doing well at preserving my capital and not screwing up this account. And I'm looking forward to when price action starts cleaning up, and I'm looking forward to when the profits start adding up like they had earlier. So I guess that's it. That's the review for the day. I am back to live trading, so I'll be streaming again tomorrow. Wednesday, probably on demo, because we are Wednesday before FOMC, which is a low probability day, but we shall see. And I hope to see you there.